Hey guys, thank you for tuning in. I am Divinity and welcome to Accounting Avenue with D. So today will be our first official lesson. We're going to kickstart into the basics, basically the concepts of accounting and its importance and the important elements of it. So dive into theory, familiarize ourselves with certain definitions, and then I will add a few practice questions right at the end. Please note that every lesson will have a question section at the end, and the answers will be revealed in the beginning of the next video. Alright, so let's dive in. Concept of accounting and its importance. So accounting is the process of keeping records of the financial data of the business. So these are records of money coming in and the money going out of the business. Right, so it is very important for businesses and individuals who own businesses to keep track of how their money is being spent and how it's being generated. This gives a business a better understanding on how they can manage their money wisely. Okay, so let's dive right into the 5 elements of accounting. There are 5 of them. So these elements include assets, liabilities, owner's equity, income, and expenses. Please note that these elements are very important. They form the foundation of accounting. Before we get into these definitions, I want you to imagine that you're a business owner, right? And you own a home goods store. So you sell luxury home decor products like scented candles, reed diffusers, fake plants, bed sheets, plants, all couches, tables, all those things. So you just sell luxury home decor, right? So as we go on to explain these elements, I'm going to give you examples pertaining to that. So just keep that in mind. All right, so the first category are assets. These are the things or the items that your business owns that is mostly used as a means to generate income in one way or another. So the assets split into 3 categories, right? The first category is financial assets. So these are things that you own that have value and can be turned into cash or used to earn money. So it's mostly like investments or resources that can grow in value over time or generate income. So an example would be cash in the bank, stocks, fixed deposits. So a fixed deposit is basically it's a savings account where you deposit money for a set amount of time. You're not allowed to withdraw, and in return the bank pays you interest, right? So financial assets are just used to make more money or grow in value. The second category of assets is fixed assets. So these are tangible long-term assets that are kept and used to help run the business. Keyword tangible, long-term. Fixed means long-term, permanent, long-lasting. Right? So these assets are actually used for a period longer than a year. So an example would include land and buildings. So that would be your physical store. Remember, you have a store, you're a business owner. This would be your physical store, like the actual building and the land that it's placed on. Second example is vehicles, like your delivery vans if you do deliveries, cars, your trucks for raw materials coming in. Lastly, it's equipment. So this is basically like your computers used for business operations. The last category of assets is current assets. So these are short-term assets that a business expects to sell within a year. Keyword short term. So these assets are short-lived. So examples would include trading inventory. So these are your physical goods, like the actual goods in the store that you're selling. Trade receivables. Trade receivables is basically just the money being received from people that owe you, right? Money being received by the business. The business receives money from people who owe them. So it's in the name, trade receivables. And the last example would be cash and cash equivalents. So this is just cash in the bank, petty cash, and cash floats. So we're going to go into the second element of accounting. This is liabilities. So this is money that your business owes to a second party, right? So it's basically a debt that the business is obligated to pay. Liabilities are split into 2 categories: non-current liabilities and current liabilities. Non-current liabilities are debts that your business is expected to pay over a period longer than a year. So these are debts that don't need to be paid with that don't need to be paid within the year. So this includes loans from a bank or a mortgage, right? And then current liabilities, these are debts that your business has to pay within 12 months, within the year, right? So it shouldn't take long to pay them back. So in current liabilities, it's short term. Whenever we talk about current in accounting, we are saying it is short term. Anything fixed, that is long term, right? So an example of current liabilities is trade payables. Remember when we talked about trade receivables, where your business receives money? Trade payables is when your business pays money to people that they are owing. An example would also be SARS payable. So this is the tax that you have to pay to SARS, right? And the last example would be pension funds. So the third element of accounting is expenses. So these are just basically the costs that incur during the course of the business running. So an example would be water and electricity. You need water to run in your business, you need electricity to make your business run. So these are the costs needed to make sure that your business runs, right? So salaries would be another example. Salaries that you pay to your employees. Insurance is another example, and lastly, rent, right? Income is the fourth element. So income, this is just money that is received by the business. Very easy to learn. Quite literally the opposite of expenses is money coming in, expenses is money going out. So an example would be sales. Whenever you sell the items, let's say your scented candles, you receive money from the customer. That is income. Rent income, that is if you are the landlord, from your tenants when they pay their rent. In their eyes, that is an expense. But to you as the landlord receiving the money, that is rent income. Another example is interest income, income for services rendered. This is if you have a service-based business. And then last would be profits from the sale of inventory. Inventory is just your trading stock, just the products that you have. Those are all the same thing. And then finally, the last element is owner's equity. So what do we mean by equity? Equity is the amount of money that the owner has in their business after all debts and all liabilities are paid off. So everything that the business is owing and everything is paid off, the left amount of that is your owner's equity. So that is basically your net worth. That is the value of the business. That is the average of it. We will dive into how to calculate all of that in the next video, but for now we're just going to focus on what it actually is. Yes, these are all the elements, so please make sure you get familiar with these concepts. Please remember, guys, I am always here to help you. Please, if there's something you don't understand, in the comment section, just ask me a question and I'll get right to you as soon as possible. However, the work comes from you. So this is through studying hard and attaining more research. So please make sure you practice. That is the key to passing well. So yeah, that's it for the video, guys. Thank you for tuning in. There will be a little quiz that will just be added just to test yourself and get yourself familiar with these definitions. So thank you so much, guys. See you in the next video.